Hi everyone, I'm Debbie Roberts, owner and financial advisor at Property Apprentice. Join us today for the Week in Review, where I talk about current events for the everyday investor and home buyer. And I apologise if I sound a little bit ragged. I have got quite a nasty head cold at the moment, so I'll do my best and hopefully I won't sneeze the entire way through this podcast. So, topics for this week. First up from the Mortgage Mag on the 11th of September, Reining in the RBNZ. Second topic from landlords.co.nz on the 12th of September, a healthier market insight. Third topic from RNZ on the 11th of September, rapid growth in the number of people looking for rentals in the last 6 months. Fourth topic from the New Zealand Herald on the 13th of September, house sales finally get a spring in their step. New data shows star performance as market picks up. And fifth topic for this week in review from RNZ on the 12th of September, record migration gains as more people take up work visas. So first topic for this week in review from the Mortgage Mag on the 11th of September, reining in the RBNZ. The New Zealand initiative argues that any incoming government following the October election should address the Reserve Bank's issues and narrow its focus to long-term price stability. They hold the Reserve Bank, the RBNZ, responsible for New Zealand's inflationary situation, citing excessive money printing, conflicting objectives, ambitious ventures, distractions, and a lack of expertise as contributing factors. The initiative's Prescription for Prosperity briefing paper suggests that the RBNZ's pandemic-related monetary policy responses have fueled inflation, resulting in taxpayer losses, volatile housing prices, and a cost of living crisis affecting everyone. Additionally, they expressed concerns about RBNZ Governor Adrian Orr's involvement in non-monetary areas like climate change policy, questioning the bank's focus and capabilities. The initiative presents the following policy recommendations to reset monetary policy. Number one, amend the RBNZ Act. Modify the Reserve Bank of New Zealand Act to specify long-term price stability as the sole monetary policy objective, ensuring that the bank stays committed to its primary purpose of fostering economic growth and prosperity. Number two, shift the RBNZ's regulatory role. Create a separate institution for prudential regulatory functions following the model used in countries like Australia, where monetary policy and financial regulation are handled by distinct entities. This separation enhances governance and minimises political interference in the RBNZ's mission of price stability. Number three, limit the RBNZ's budget. Restrict the RBNZ's budget to cover its monetary policy responsibilities, preventing the institution from engaging in activities beyond its core function, such as climate change and promoting the Māori economy. Number four, return the inflation target to 0 to 2%. Revert to an inflation target range of 0 to 2% rather than the existing 1 to 3% to encourage more prudent monetary policies that reduce the risk of excessive inflation and support sustainable economic growth. Number five, stop the implementation of deposit insurance. Cease the implementation of deposit insurance to maintain market discipline and discourage risky lending practices by banks, promoting financial stability. Number six, on inabilities of to purchase securities to government paper only, preventing intervention in the private sector and resource allocation distortion. And number seven, ensure a credible timetable for reducing the RBNZ's balance sheet. Establish a clear and credible schedule for the RBNZ to reduce its balance sheet to pre-pandemic levels, addressing potential risks to long-term financial and price stability resulting from an expanded balance sheet during the pandemic. This commitment signals dedication to long-term price stability and boosts economic confidence. Second topic for this week in review from landlords.co.nz on the 12th of September, a healthier market in sight. The New Zealand residential property market appears to be undergoing a change. Quotable value, or QV's latest house price index, the HPI, indicates modest growth in home values for the quarter. This growth is primarily driven by first home buyers in regions outside the main urban centres. The national average home value has increased by 0.5% to $893,639. marking the first quarter of positive growth since the downturn began in late 2021. However, in most major urban areas, home values are still declining, according to these stats. Tauranga, Marlborough, Christchurch, Queenstown, and Invercargill are exceptions with modest growth this quarter. The House Price Index reveals that the rate of decline has slowed in Auckland, Wellington, and Palmerston North, and has increased by less than a percentage point in other regions such as Whangarei, Hamilton, Rotorua, New Plymouth, Napier, Hastings, and Dunedin. According to James Wilson, QV Operations Manager, the housing market is showing signs of improvement, particularly in areas with strong demand for entry-level housing. The more affordable segment is propping up the market, especially in regions starting from lower value bases. While sales volumes have increased, the number of new listings continues to decline overall. Real estate agencies report growing interest in a limited number of new properties, resulting in increased home values. Market confidence appears to be growing, but the upcoming election and economic challenges, such as households refinancing mortgages at higher interest rates, may continue to restrict investors. Wilson suggests that while some areas are seeing strengthening home values, significant growth is not expected. Instead, many areas may experience flat or modestly rising home values, while others may continue to stabilise. Here's the breakdown of the situation in various regions. Northland, home values have continued to decline in Northland, with the largest reduction in Kaipara. Auckland's average home value increased slightly in August, marking its first monthly increase since late 2021, according to QV data. The North Shore, Papakura, and Manukau are areas with notable value movement. Tauranga experienced a modest quarterly home value gain, with first-time buyers driving market activity. Home values in the Waikato region have reduced on average this quarter, with some pockets of positive growth in selected areas. In Rotorua, residential property values declined slightly this quarter, but demand from first home buyers is increasing. Taranaki, New Plymouth's home values have remained relatively stable, with only a minor reduction. The Hawke's Bay region continues to see declining home values, with Napier and Hastings experiencing the most significant reductions. Palmerston North, the rate of home value decline in Palmerston North has remained consistent, with affordability being a concern. And in Wellington, the rate of home value reduction in Wellington has eased, and the region even saw a small increase in August. First home buyers are the most active group. Nelson, home values in Nelson continue to reduce consistently, with some oversupply of homes. West Coast, home values on the West Coast increased on average this quarter, although they fluctuate due to market volatility. And in Canterbury, Christchurch saw a modest increase in home values, signalling a potential turnaround, but the market remains uncertain. Dunedin, home values in Dunedin continue to decline, but there are signs of growing buyer confidence. In Queenstown, Queenstown's residential property values remain volatile, with some growth in the average home value this quarter. Invercargill, home values in Invercargill are increasing for the third consecutive month, driven by first-time buyers and limited investor activity due to interest rate rises and tax rule changes. Okay, so my comments on this are that, we're seeing some varied data available, and the Real Estate Institute of New Zealand House Price Index, for example, is showing growth. So I think it is important to point out that the Real Estate Institute of New Zealand House Price Indicator, or the HPI, they reflect their results based on the date that the contracts were signed as opposed to settlement date. My understanding is that quotable value, or QV's house price index, also uses the settlement date rather than the date that it's signed. So it could be a case that QV's data, like CoreLogic, could be lagging a little bit, because often, there's quite often 3 months between the date the contract's signed and when the property's settled. So it is important to understand how all of these things work, so that you get a good understanding as to what's actually happening in the market. Okay. And we're certainly seeing different results when it comes to the averages versus the medians. And yeah, so it's always keeps it interesting, doesn't it? Seeing how different statistics can skew the results a little bit. If you'd like to learn more about investing in property, join me at one of our free events called How to Succeed with Property Investing. I'll discuss strategies for successful investing from my perspective as a financial advisor, and these are available live online or in person. Check out propertyapprentice.co.nz for upcoming dates and register today. We don't sell property, so it's all about increasing your knowledge to reduce your risk. If you've already been to one of our free events and you'd like to find out more about how we can help you to reach your financial goals, you can also book a no obligation phone call or meeting with my husband, Paul Roberts, via the website. And if you are already a coaching client of ours, then obviously you already know that you can reach out to your coach whenever you need help. Third topic for this week in review from RNZ on the 11th of September, rapid growth in the number of people looking for rentals in the last 6 months. Auckland is facing a severe shortage of residential rental properties, which has escalated to a crisis point. Over the past 6 months, there's been more than tenfold increase in the number of people seeking accommodation. Impression Real Estate, a rental firm managing 1,000 properties in Auckland, reports a significant surge in demand. The number of prospective tenants viewing each rental property has surged from an average of 5 to 50. Rishabh Kapoor, CEO of Impression Real Estate, highlights several factors contributing to the rental shortage. Number one, inner city pressure. The shortage is placing a strain on the inner city property market. People who've lost their homes due to storms earlier in the year, along with recent migrants, are now seeking central city apartments. Some have chosen to move to the CBD after weather-related incidents, because obviously a lot of the inner city apartments are also offered for rent, are fully furnished. So many of these people are also avoiding properties with large sections or near hillsides that could be vulnerable to natural disasters. Secondly, downsizing. Some tenants are downsizing from larger family homes because they can no longer afford mortgage payments at current interest rates. They're selling their homes and looking for rental properties. Number three, increased rental prices. The demand has led to a roughly 5% increase in rental prices over the past 6 months. Desperate tenants are offering higher weekly rents, sometimes exceeding the listed price, and even resorting to bribes to secure rentals ahead of others. So it is important to point out that the landlord can't ask tenants to pay more than asking price on, if they're advertising it for rent. However, tenants can offer a higher weekly rent payment. I would strongly recommend that if you're a landlord looking at renting a property, don't take bribes to secure the rental property. That's a recipe for disaster. Can you just imagine if that got into the media? So just don't do that. We've had enough hate over the last 6 years or so aimed at landlords. So, let's just not make that worse. But if you are a tenant and you are looking at moving into a rental property, if there's one that you're really keen on, just remember that although the landlord can't ask you to pay a higher amount, you could potentially offer to pay a higher amount than advertised. And you might get the key to that property over someone else, as long as you meet all the rest of the criteria for moving in as a tenant. Number 4 from this one, legal challenges. There's been a 43% monthly increase in the number of applications to the Tenancy Tribunal, reaching over 2,100 applications. This reflects the rapid growth of people new to renting who may not be familiar with industry regulations and their rights and responsibilities under the Residential Tenancies Act. So it's vital that all landlords understand their rights, and I highly encourage tenants to also understand their rights under the Tenancies Act as well. To address the challenges brought on by this rental crisis, Kapoor emphasises the need for better education and information for both landlords and tenants. Many newcomers to the rental market are unfamiliar with the rules and regulations governing tenancy. Impression Real Estate is utilising an AI chatbot to provide assistance and answer questions from tenants and landlords, including those located overseas who may not be well versed in local legislation. However, Kapoor stresses the need for broader efforts to address this crisis and meet the growing demand for rental properties. So I've got a couple more thoughts on this, and that is that if you're looking at managing a property yourself, I highly encourage you to, I strongly encourage you to join your local Property Investors Association and do the Landlord Self-Managing course that's available for free to its members through the NZPIF website. That's the New Zealand Property Investors Federation website. Any other general inquiries, the tenancy website is also very, very useful and informative. So tenancy.govt.nz, loads of information there if you're a landlord or a tenant. So go check it out. Fourth topic for this week in review from the New Zealand Herald on the 13th of September, house sales finally get a spring in their step. New data shows star performance as market picks up. The New Zealand property market is showing signs of recovery and increased activity, according to data from the Real Estate Institute of New Zealand, or REINZ, and observations from bank economists. In August, there was an increase in the total number of properties sold throughout New Zealand compared to the same month the previous year. Sales were also up compared to July of the same year. Notable performance was seen in Marlborough, up 38.1%, and Canterbury, up 24.9%, although overall sales increased nationwide. Low listing numbers and demand for entry-level properties have contributed to the market's positive trend. But that's actually quite important to point out as well. When we're looking at medians and averages, if the majority of properties that are in high demand are in those entry level price points, that could be also part of the reason that we're seeing, when we're looking at averages and medians, why we're not seeing a significant increase in the values, because if the majority of properties that are being purchased are at the lower end of the scale, then averages and medians are also going to still remain at the low end of the scale as well. It's when we start getting the higher value properties coming in that the averages and the medians can be skewed upwards. So, important to point that out. Despite challenging economic conditions, low listings, and the anticipation of an election, the market is improving. However, higher interest rates and cost of living pressures are still impacting the market. Some regions showed variation in median prices. Tairāwhiti Gisborne saw a 14.8% year-on-year increase to $650,000, with owner-occupiers and first home buyers active in the region. Taranaki experienced a 12.4% year-on-year decrease to $565,000 in median prices, making it a buyer's market. In the South Island, prices on the West Coast decreased by 5% year-on-year, with a median price of $332,389. However, the local market is expected to pick up after the election. In Southland, median prices increased by 2% year-on-year to $449,000. Nationwide, listings increased by 20.9% in August compared to the previous month. Days to sell decreased by 5 days compared to July 2023 and decreased by 6 days year-on-year. The national median price decreased by 4.1% year-on-year from $800,000 to $767,000. The total number of properties for sale nationwide decreased by 10.6% year-on-year. However, the total number of properties sold in New Zealand in August increased by 9.2% year-on-year to 5,509 and was up 9.2% month on month. Bank economists also noted the market turnaround, with expectations of accelerating house sale and price growth in the coming year. Sales have increased, especially in Auckland and Canterbury, and the market has found stability after a period of decline. While the housing market is not described as strong, there is evidence of a turning cycle. As spring approaches, increased confidence and activity are expected to further strengthen the housing market. Although I would add that, prior to an election, it's quite common for people to sit on the sidelines. We've got like a month to go before the election. So there will be a lot of people that will just be sitting back and watching, waiting to see who gets in before they decide whether or not to purchase a property. Interestingly enough, the first home buyer market seems to be the least affected by the election cycles. So, no surprises that they are the largest number of buyers in the market at the moment. Last topic for this week in review, topic number 5 from RNZ on the 12th of September. Net migration has surged following last year's lows, primarily driven by an increase in work visa holders, potentially impacting both consumer spending and the rental housing market, according to an economist. Statistics New Zealand's provisional estimates indicate that net migration reached a historic high of 96,000 in the year ending July. This marks a significant turnaround from the previous year, when 14,500 more people left the country than arrived. The main contributors to this net migration gain in the year ending July were citizens of India, the Philippines, China, South Africa, and Fiji. A total of 135,600 non-New Zealand citizens arrived during this period. Before this record figure in 2023, the highest was 80,400 in the year ending March 2020. During the same 12-month period, a net of 39,400 New Zealand citizens departed. Yassine Islam, Population Indicators Manager at Stats New Zealand, noted the net gain of non-New Zealand citizens continues to set new records, while the net loss of New Zealand citizens is approaching the record loss of 44,400 in the year ending February 2012. The record net migration gain in July 2023 followed 12 months of an open New Zealand border and equated to a net gain of approximately 19 people per 1,000 population. Senior economist Satish Ranchod of Westpac commented that net migration had exceeded expectations, potentially reaching an annual net inflow of 100,000 in the coming months. He attributed this to the increased number of migrants on work visas, which has facilitated employers in finding needed staff and skills. This influx of people has also supported consumer spending, particularly in light of tighter financial conditions. Ranchod also suggested that migration might be influencing the housing market, particularly in Auckland's central business district, where rental accommodation has become scarce, as we mentioned in the previous article, leading to notable rent increases. Additionally, recent months have seen the housing market stabilising. Mark Smith, senior economist at ASB, noted that arrivals of non-New Zealand citizens on work visas have reached record highs annually. He anticipated that the pace of net inflows would moderate as the New Zealand economy slows down, reducing its attractiveness for migrants. This, in turn, could help ease inflationary pressures. A more competitive market comes with its own challenges and opportunities. If you'd like to learn about the property market, join one of our upcoming free events called How to Succeed with Property Investing. As a seasoned property investor and licensed financial advisor, I'll be sharing valuable insights and expert tips to help you on your journey. Whether you're thinking about buying your first home or if you're already an experienced investor, there's something for everyone at our free events. I'll also tell you more about how we help our clients achieve their financial goals. So if you're interested in finding out more about what we do, visit propertyapprentice.co.nz today to secure your spot and register for one of our upcoming events. Alternatively, you can book a no-obligation phone call or meeting with my husband, Paul Roberts, through our website as well. That's propertyapprentice.co.nz. Thanks for listening.